Welcome back to our special show. We are discussing the KPMG CEO Outlook Report. This is the 4th edition. We're in conversation with Arun Kumar, Chairman and CEO of KPMG India, Rashesh Shah, Managing Director and CEO of Edelweiss Group, and Sumeer Chandra, Managing Director at HP India. Gentlemen, once again, thanks very much for being with us here. We got through a couple of points before we took that break. I want to now come to another interesting finding, and this is with regards to M&A. Mr. Kumar, if you can detail this out and flesh this out a little bit. The survey says that CEOs in India are less likely to take the M&A route to achieve their medium-term growth objective. Right. Why? I mean, is this because valuations are high or there's enough opportunity back home?
First of all, the big focus was on agility, how to grow. A lot of that was growing inorganically. A lot was growing geographically to new geographic territories. And then in terms of organizing through alliances, to capture markets through alliances, instead of doing it yourself. So if you look at the survey, you see that the focus on alliances and the ecosystem is much higher than it was before. But I must also point out that there's a big difference since the survey was done, which is the whole stressed asset situation. So we are going to see a lot more transactions happen, which really are a different form of M&A. So that's, I think, a pretty significant change since the survey was done, and I'm sure that Rashesh will have much to say on that.
Did you ask a question specifically about the opportunity they see to the Indian CEOs in the stress assets?
Well, no, the question was about M&A, and the timing of the survey
generally
was
about
early.
M&A, okay.
Yeah, the timing of the survey was
and
earlier.
Since then, many more deals have happened and things are starting to pick up.
Since then, changes have occurred.
Yeah. Would you agree with that?
Yeah, I think there is interest in M&A, but as you said, current valuations are fairly high, so people are not, very gung-ho about paying huge valuations. But for stressed assets, there is a huge amount of interest, and obviously a lot of the stressed assets are in steel and cement. These industries are clearly seeing an uptick, and setting up a steel plant is a 5-year project for somebody to do a greenfield one. So there is a lot of interest in buying and operating, an established plant. So we're seeing a lot of interest in stressed assets. As you said, there's increasingly interest in acquiring globally also to get a base in other markets because of all the trade wars and the barriers coming up. So I think also in the last 4 or 5 months, I think the confidence of Indian CEOs has gone up. So maybe when the survey was done 5 months ago to now, the animal spirits have started to come back. The optimism is coming back. Quarterly results, first quarter were the quarter ending March was fairly good. This quarter also, the results are coming out fairly good. So I think Indian economy is on an uptick, global economy is on an uptick. Some macro headwinds are there. But I think most of the Indian CEOs that we talk to, they have always operated with macro headwinds in India. In India, inflation has always been high, government fiscal deficit has been there, liquidity is low, and in spite of that, over the last 20 years, companies have done very well.
Correct.
So this is not an unfamiliar territory for Indian CEOs.
Right. Because, I mean, you yourself are so active in the stress assets space. Edelweiss as a group is so active, and you advise on transactions, etc. as well. Do you believe that M&A transactions, which may happen at this stage, and large M&A transactions, which we've seen 2 of those recently, without going into specific situations, are in a way coming at a cycle high? When I say cycle, I mean like global cycle high. Because markets have been very buoyant, and that lifts everything, right? Valuations, prices, everything. Are we coming at a high, and maybe it's going to go the other way?
It's very hard to say whether cycle high or not, but what we're seeing in most industries, whether it's steel, cement, aluminium, all of this, the cycles are getting shorter and sharper. So companies are also comfortable buying, because even if you're buying at the high, there'll be a downturn, but it won't last for 5 years. It will last for a year or 18 months, and they'll come back again. So we saw a very sharp downturn in steel in 2015, but it was an 18-month downturn, and the last 18 months have been very good. So
I think back at all-time highs.
I think the global cycles are getting shorter, but the good news is global economy is on an uptick, whether it's US, whether it's Europe, whether it's Japan, India, China. I think there is good economic growth in each of the regions of the world. India is also experiencing an uptick, having come out of GST, demonetization and all that. So I think given all this, people are confident that if they buy something now, they will manage it. And if there is a little bit of downturn also, people have contingency plans to manage it, because this won't be very long ones.
Okay, fair enough. Mr. Chandra, any thoughts to add to this? Mr. Shah began by saying that valuations are high. I mean, to do deals, you have to pay top dollar, maybe more than top dollar.
Yeah, no, I think the way we look at it in the tech sector, I mean, we have, presence in 150 plus countries. So for us, M&A is less about market acquisition. It's more about acquiring certain technologies that we may not have. And a good example of that is last year, HP acquired Samsung's printing business for more than $1 billion. Which gave us access into a new segment, the copier segment, which is a $55 billion market. So I think what we see is companies getting into adjacent areas and using M&A more smartly, while there is a lot of opportunity for growth organically within the country. So I think companies are getting a lot smarter about how they use M&A.
Okay, now this one is interesting. We're moving on to the next sort of finding in the report. The survey finds that 40% of the CEOs find it difficult to understand how millennials' needs differ from older customers. Millennials are essentially people between 17 and 35, broadly defined as that category. And 40% of the CEOs say that they find it difficult to understand their needs. And this is, of course, an extremely influential and fast-growing segment of the population which most businesses want to target. Mr. Kumar, this is interesting.
Right. Well, we have a very large population of millennials. I would hazard that the majority of our firm, well over 50%, would be millennials. So we have to look at them very differently. We have to we do things like creating communities for them, creating flexible working times. Their aspirations are different. The good news is that the millennials are more attuned to the concept of a higher purpose. It's not just about a job. So to appeal to the millennials...
But that can also be a challenge, I mean, in a different way, right?
It's a challenge, but I actually personally think of it as good news. We were just chatting about multiple stakeholders. So it's not just about, what you earn for yourself. It's about how you contribute to society.
Sure.
So I think there are many positives that are coming in with the new thinking of the millennials. And to serve them, the whole approach of their needs, the individualized needs, etc., will drive the way businesses look at them.
I mean, you and your business essentially are going after this pop category, right? I mean, that's where the spending is.
I think even for us, actually, the entire millennial opportunity is both on the customer side and the employee side. Out of 11,000 employees of Edelweiss, the average age is about 28 years. So there's a large population which is between 25 and 35, at least in that, from our employee standpoint of view. And their needs are different. I think all over the world, the millennials are changing. They are more conscious.
The concept of money is also different. Ownership of assets is different.
The concept of money is different. Their concept of what they are looking for, but they're also very value based. They attach a lot of value to being appropriate and being conscious of the environment and all that. And we're seeing that in customers also. Earlier, somebody who was under 35 was not a big buyer of any financial services, not a home loan, not a broking account, not a mutual fund, not an insurance product. But now we are seeing that people in the late 20s and early 30s are also buying it. And like all other companies, we are adapting to the needs of that customer segment. They are a lot more online savvy. But they also do use, they talk to people and they also talk to advisors. So they need what we call an multi-channel. So they will, when they want to go online, they want to go online. When they want to talk to somebody, they want to talk to somebody. When they want to meet somebody, they want to meet somebody. So you have to construct your business in such a way that the customer is one, but the channels of servicing that customer, interacting with the customer has to be a really multi-channel approach. And the millennials are very comfortable with that. They switch from one channel to another very smoothly. While the older generation, people of my age group, if we are used to meeting somebody and doing business in that way, we'll continue to do that.
Sure. Mr. Chandra, I mean, the best way to connect with that age group is to appoint somebody in that age group in a leadership position, would you say?
Yeah, I definitely think that you need to have a good representation of millennials within the organization, and I think India has the benefit of that demography.
Right.
But I think the way you reach out to these customers changes. I mean, online becomes important, digital becomes important, social becomes important. The way you market to them has to be much more authentic. So the nature of marketing changes. So there's a lot of and I believe the millennials are really an experienced generation. So we're designing products which are more experience-oriented, better designs, more enabling of collaboration, which they are much more comfortable with virtually as well as in person. And then also we're looking at new ways of consuming products. They're not necessarily high on ownership. So can we create consumption models, new business models? So So I think a lot of interesting challenges, but it's pretty exciting, I think, to have millennials in the organization and to serve them as customers.
Well, we don't have a choice, do we, in any business for that matter. Thanks very much, all of you, Mr. Chandra, Mr. Shah, Mr. Kumar, for coming down to our studios and taking us through a very interesting report. Thanks very much for watching the CNBC TV 18 special.